July 22nd, Monday. Good morning, guys. I hope everybody got plenty of rest. Very busy week this week as far as earnings. Got some big heavy hitters reported like Google and Amazon and great stuff. So not many so far reported this morning. So we're actually going to focus tomorrow morning in the daily video on various plays as far as earnings. We're going to keep doing it through the end of the week. For now, some basic observations. The main reason markets were just so sensitive is, again, because they're so sensitive because of this upcoming rate decision on July 31st. So even though we were one day off on the analog, so far pre-market markets are in the green. So it looks like the analog is back working for us again. I hope everybody get a chance to watch that documentary I posted that talks about the analog. Even though they are very precise at times, they also could be off by a couple of days in instances, which is given in that documentary. So if you haven't checked it out, make sure you watch it. Watch it multiple times because there's a ton of stuff you guys can learn from that. But as far as Amazon is finally catching a ton of upgrades. So far, there's been multiple upgrades, upgrading Amazon stock to 2,200, 2,500. I'm still waiting for this 3,000, 3,500 price target from somebody. Now, the most interesting thing about these upgrades that Amazon is catching from various analysts this morning is the fact that they are actually fearlessly doing it before the earnings report. Let me just describe to you real quick how analysts actually do these things. And typically, they will wait till the earnings release comes out in order to be safe, in order to say, well, yeah, the earnings are good, yeah, the stock is going higher, now we're going to put the price upgrade on it. So the fact that it's not just one, but we've got multiple analysts upgrading the stock 3 days before the earnings announcement is a very interesting thing, which tells me they are going to be buying the hell out of this thing today, and they are going to be moving this price higher. It also tells us that they are expecting a strong earnings beat, not just an earnings beat, but an earnings beat on earnings and revenue and strong forward-looking guidance. And that is why they're putting these strong price targets out there. Now, I think this trend will continue, and after the Thursday announcement on Friday morning, we will see more analysts actually upgrading the stock. Again, this behavior that we're seeing right now, that upgrading the stock 3 days before earnings, it's not typical. So I think there's plenty of analysts that would love to upgrade the stock. They're just going to wait and hold off till Amazon actually announces earnings. Now, you know, Amazon's got pretty expensive options this week, but it's a pretty easy play, guys. So you can buy them and hold them through the earnings. You can actually keep some through the earnings report. You can, certainly don't risk a ton of your account to do that. Because initially it could have an awesome earning, but it could actually pull back, right, and then rally substantially. So be very careful with these earnings plays, but I think today, tomorrow, Wednesday, and Thursday, they will be buying Amazon, driving the price all the way to 2,050 level, which is basically all-time high, and then we'll see it's probably going to hit 2,100 plus 2,150, 2,200 after the earnings announcement. So that's basically what we're looking at. It was selling off on very low volume again on Friday, and that's typically a bullish thing. So VIX is hitting the upper tunnel range again, guys. Every time VIX has gotten to this upper tunnel range, it has dropped from there. I don't think there's going to be any difference here. The markets, again, were jittery due to the whole thing. They're going back between, is it going to be a half-point cut, a quarter-point cut? So there was some indication that was sent to the market by Fed Chair Williams. Basically, he put up a nice speech. The market realized, hold on, it's it's going to be a half-a-point cut for sure. And later he made a few comments that made the market believe otherwise. So we had a crazy shift from Thursday buying into Friday selling. But I think everybody had a chance to step back over the weekend. All the institutions reevaluated the conditions, and so they're buying the market again. There's clearly some really good pre-market action that resemble move sevens all the way from Friday after hours to, when the futures opened yesterday on Sunday. So really positive bullish action so far. The most concerning thing is not these short-term reactions to the rates, but rather than, this behavior that we've noticed was the biggest concern. Apple started really positive on Friday, and it sold off until the end of the day, and so did Microsoft. The worst part is the fact that Microsoft actually sold off on a really, really amazing earnings report and really great guidance. So I think over the weekend, institutions are waking up saying, hold on, why the hell were we selling Microsoft? We should have been buying it. So I think the easiest play for the week from the company, you don't have to gamble on this, right? You already know the earnings were awesome. They are going to be buying Microsoft this week. There's no question about it. So Friday closed at 136 per market, so far at 137. Can easily go above 140, possibly hit 145. Now 145 by Friday could be a stretch, but by next week Microsoft could be hitting 143, 145 level easy, because the numbers were that good. And I think institutions, they have no choice but to buy Microsoft. So with that said, some of the trades that were implemented and considering today: Microsoft calls, Google calls, Amazon calls. We're watching Lennox, LII is the ticker, and Whirlpool. Lennox reported earnings so far. It's down on very low volume. The history of the stock is such that after earnings report, it has a high frequency of dropping on low volume, and after that it goes to the moon. So this could be a really easy, really nice, interesting trade right here, guys. I will send out the message in the group if we're taking advantage of this and how we are playing this. As far as the historic analog, right, nothing has changed. We were off by 1 day by some short-term reactions within that day, but I mean, we are here. As you can see, today could be today overall is a positive day, right, slightly higher, but we're not finishing at the highs. So don't trade like SPY calls, SPY puts. Just don't take any directional trades on the indexes. That is not going to be a good strategy for this week. Just focus on the earnings, guys. Have so many earnings, it almost doesn't even make sense to play these indexes this week. So if you wanted like a cheaper option, and that's why, let's say you're buying and trading SPY calls or puts, then a better alternative would be Microsoft calls. They're just as cheap as SPY, and you can probably get a lot better traction with those. So buying the dip is what we're going to do today, intraday, in some stocks, but overall, we're not going to do a whole lot of these directional plays. We're basically making a big bet on Amazon again that they will be buying, because we now have analysts doing something that they're not typically doing, which tells us they are going to move the price of Amazon substantially over the course of the next 4 days going into the earnings report. As far as the tunnel, guys, everything looks nice and steady, and we're basically, in the next couple of days, we should revisit this 3023 level easily. So things are looking good for Amazon. I think once we clear this handle on the weekly chart, which would coincide right here with that level 2050. Basically, if you are not taking any Amazon trades because the options are so overpriced right now, the ideal time to pull the trigger on Amazon would be Friday morning. So don't be utilizing a ton of your account. This could be a really, really easy trade on a Friday morning. We can catch it off of the behavior of Microsoft on either a reversal and then buying the dip, or we can just buy the intraday dip. So this trade is going to be very, very nice and easy. Guys, July 19th was a move too. On a Friday, things looked rather green in the morning, and then we surrendered all the gains, and notably had another shift in the behavior where it went from the previous day where institutions were buying stuff into the close. They were actually selling stuff into the close, thinking, hold on, what if we don't get that 0.5% of a rate card? What if we only get a quarter? Well, if we only get a quarter, we want to sell. That's what they were thinking. That's what you see right here on this chart. Okay, 2-day sequence is 7-2, guys, and basically it represents a shift from that strong buying behavior in the last 30 minutes to a strong selling behavior on Friday. Now basically total reverse moves to where basically here institutions are buying every dip, and here they are looking like they're buying the dip, but all they're actually doing is selling the pop. So we're going to be making sense out of this market today and tomorrow to see which behavior actually prevails. And if this fight between 7 and 2 is going to continue, then that explains why the historic analog points to the fact that we're just going sideways. In other words, we could be opening higher, selling off, the next day opening higher, selling off, then moving higher. They keep buying the dip, but overall, we're just not moving. We're just going sideways. So therefore, focusing on specific earnings plays is the way to go this week. Okay, on a 5-day sequence, we're getting 5, 2, 3, 7, 2. As you can see, it clearly represents the fight between the bulls and the bears. Now we've got a pretty strong mix between the bearish reversal moves and a bullish reversal moves. Typically in a sequence like this, you will see a 7-2-1 or a 7-2-3. So it's going to be a fight between 1 and the 3. However, considering that the VIX is at the top end of the funnel, we think there's a higher probability of a move 1 or another 7. So we could see this sequence continuing into 7-2-1, 7-2-7. Considering the markets are going sideways, we can clearly get a 5. So 7-2-5, 7-2-1, 7-2-7 is what our expectations are. If we take a look at this sequence, you will clearly see that you've got a double bottom formation here in such a way that the first button is created right here. The second bottom is right here, right after the markets close on a Friday. This part is lower than this part. Now, it does happen, okay, when we actually hit this level of 2969.5, it does happen on rather smaller volume than overall the volume was for the last few days, because we actually hit that point after the market closed. So expecting a rather strong bounce. Anytime you see this type of formation, guys, the bounce typically will follow. Now, what we're not certain right now is the magnitude of the bounce, but clearly we could get back to this 3,000, 3,010, 3,020 level over the course of sort of grinding higher over the next 72 hours. Okay, overall, nothing to worry. Big smiley face. Next market move for today, as mentioned earlier, 1, 7, or 5. That's what we're expecting today. I'm not calculating a huge probability of a reversal lower. Now, it doesn't mean that we cannot end lower like minus a point or two, but everything really points to a green day today, guys. So VIX, again, we stay firm in this. We'll be hitting 11 by July 31st. We did have a very nice, strong day for the VIX. It opened up on Friday at 13.18, went to 13.9, continued to rally, and finished at the highest point of the day. So far, pre-market, it's a pop, and it is against that level of the higher part of the trading tunnel right here, which is this area of 14.6, 14.7. So I think from here, it could maybe possibly take another run at this level of 14.7, then we could see a further drop. The key takeaways, guys, from this brief short video is, okay, guys, the key takeaways, wait till 10:30, right? If you see a reversal coming in, okay, even though we don't assign a strong probability to this today, but most of the reversals, they will take place before right around 10:30 in the morning. So in a move like 2 or 3, if you're getting a bearish reversal, by this point in time today, we will know if there is indeed going to be a repetition of what happened Friday. So if you want to be 100% on the safe side, wait till about 10, 11 o'clock to pull the trigger. In other words, don't buy stuff right out of the gate. However, I'm personally considering buying Amazon right out of the open, some and stair-stepping into more of a position later. So buy in the money near the money calls to protect yourself, because again of the possibility of the strong sideways trend. Hold calls into earnings on Amazon. Into earnings meaning by Thursday evening, like 3:55. Don't forget to sell most of them. If you want to keep 1 or 2, that means that's fine. But don't hold a ton. And don't hold a ton that expire this Friday. If for those of you that are holding contracts that expire on Amazon 2-3 weeks from now, you're totally fine, because even if initially it could create a dip, it could rally the same day, or it can create a dip after hours that institutions could come in and buy after listening to the earnings call, and then Friday it could open up with a strong gap higher. So it really makes sense if you're holding 2-3 weeks contracts out to just hold on to them and not do anything with them. And the most important thing, we will be observing whether the buying behavior or the selling behavior into the close is going to prevail today. Guys, with that said, Get ready to rock tomorrow morning. We got a ton of earnings plays that are coming up this week, so don't trade the directional stuff. Focus on trading earnings. We will be going over some major plays tomorrow and Wednesday and Thursday and Friday. With that said, guys, have a great day. I'll catch you on the next trade.